Welcome everybody. Today we have a very special guest, Shawn Flynn, and he has a fantastic podcast called the Silicon Valley Podcast, covering mergers and acquisitions and investment banking. So welcome, Shawn. Thanks for joining us today.
Greg, it's an honor to be on your show. Thank you for the invitation.
No, I was just saying you have the most links and social media that I have ever seen of anybody. How you keep it all in track got me beat. I just in admiration of that. But let's get into it. One of the things from a merger and acquisition, you've been doing this for how long have you been involved with the mergers and acquisition and investment banking?
In some role for, well, quite some time. There was a while there I was helping companies package them, get them ready to land overseas. So I was doing that for a number of years in more of a biz dev role, but at the same time, it was kind of the investment banker, the sense that we're getting them ready to meet investors, governments, local officials to set up operations overseas. Before that, I was helping companies, well, once again, package and prep them for an angel group I was a part of. But the exact official title of investment banker has been about 6 years now.
Okay. Now, we had a whole thing going here, and I'm just going to surprise you here. We were going to talk about trust, which is really important, and I do want to do that. But I want to focus in on, you've just said the same thing twice there, could you? Can we talk about that straight off? Because what does that mean? And how important is that to the founders and the entrepreneurs that are watching this today?
It's huge. And in fact, I'm actually glad you pointed that out because as you said that, I'm thinking, I don't think I've ever talked about that on my show. I'm not even sure if I've even really directly, specifically said that to a company of, we got to get this package together. But internally, while I'm working,
we're about to do something. First off, cue flash banner.
So the package itself, think of it as you're taking that company, all the details that you know about because you've done research on them, you've put all their documents in one place into a data room, you know the org chart, the cap table, the IP, the sales materials, the everything, and you're wording it, you're positioning it, you're structuring it in a presentation that captivates the potential investor or buyer or whoever you're targeting, and you're making it so you know their thesis, what they're looking for, and you know the company, how they can match it if you put it in the right light. And then you're wording it so that when those two come together, it's two puzzle pieces matching or a lock and a key matching. And so that's what I mean by packaging the company, of getting them ready, prepping them, helping them, finding those yellow or red flags in advance and helping them fix those so that when they have that opportunity or when you bring the opportunity to them as the investment banker, that middle person finding it for them, they're ready and that there's that match there. So that package is putting all these loose pieces together in a comprehensive, clean way that is understandable, that could be presented to the ideal person on the other side of the table.
In Australia, you can get your credit score, but if you don't pay a bill or something like that, it goes on your credit score. And that can take years to come off. Absolute years. If you just let it run, it could take 7 years to come off your credit score, off your credit report. You can get smart people, probably like yourself, that will go in and say, okay, let's remove that. We've got an arrangement here. So how long does it take to clean up these companies and make them look good and package them correctly? And what's involved with that? Because it could be bills, I imagine. It could be an image thing in one respect as well.
There's infinite things. There's really infinite, and each one takes a different amount of time to clean up. Maybe you're looking at the data room, you're like, hey, that's odd. This one document was never countersigned. We got to get that taken care of. Or, hey, there's this one person that was a contract employee that was an engineer, but there's no contract saying that what he did, that IP is owned by the company. This is kind of important. Let's get that document cleaned up. Or, hey, there's this two, we call them safe notes. Think of it as you're investing in a company. There's no equity trade today, but it's security agreement for future equity. It's very common in Silicon Valley and some other parts of the US. I'm not sure if it's caught on in other parts, but I worked on a deal once where in the data room I went, there's two safe notes for the same person, but they have a different cap Like there's different terms in these safe notes. And I went to the founder. I was like, "Hey, what's going on here?" "Oh yeah, we sent that one, and then we had a call, and then we sent that one." And I was like, "Well, they're both signed on the same date and everything.
Really?
We really need to talk to the investor and get cleaned up. Which one
Mm,
is going to be the one that's used for this once there's the exit and things convert and all those because they were at completely different valuations, and that's substantial for both parties. And there's things
absolutely.
like that that you notice. You're like, but some of these companies are moving so fast they just don't catch it or don't think it's a big deal. Or I mean, there could be yes, I bought this from this other person on a handshake. Well, where's the documentation? Oh, it's my buddy. Let's get that documented. And there's things like that where, I mean, maybe it's just a quick email and things get settled real quick, or maybe it's, oh, you want this settled? I changed my mind. You have to pay me this much more, and it's back and forth for months. So
Mm,
you never know how long things are going to take. But that's the big thing about getting the company ready to go out to market and packaging is it's better to find these things early than later. It's better to find them before you start having any conversations with potential buyers and investors versus when you're deep in due diligence and they discover something. Because if they discover something, well, trust is lost. There's, retrades, maybe the deal's dead. There's so many things that could happen when they discover things versus when you discover it at the beginning and there's still time to fix them.
have you ever done a role where the initial offer was kept, or has it always had some variation in it for details like you're talking about there?
Actually, I would say the opposite. I'd say the initial, well, you're talking about the LOI in due diligence, sticking
Yes.
that verse, people submitting LOIs and then going back and forth. We've had deals where we've gotten the LOI and then during due diligence, we've done better than the predicted milestones and we've actually gotten a lot more from it.
Oh, great.
Instead of them retrade, we've countered and gone, hey, it's not worth us to continue with this deal. We'd rather go back out to market or hold for another year or so because of the growth to get a new proposal from the other side. But, there has been times where things are discovered in due diligence and it's not so much the yellow and red flags because we're very good on our side of going through everything in advance. And if we need to wait, to wait. But sometimes the founders, the owners get distracted a little bit. They don't hit the milestones that are predicted. And because of that, there's some components that might be requested to be altered or that. One thing, though, to help with this is doing the due diligence on that investor or buyer and finding out if they have a reputation of retrading. I mean, there's definitely groups out there. And this is, well, for your audience, this is one of the questions I always ask at the very beginning during management meetings. They always at the end, do you have any questions for us? One of my questions I always ask is, of your last 10 LOIs, how many that were signed, how many were retraded? And then why?
Writing that one down.
And, if they come back and they say two of them and they have valid reasons, great. If they say eight of them, you're right there, okay, whatever their offer is, just knock it down a couple of notches.
Mm.
And asking questions like that reveals so much information. So I really try to do due diligence on the potential buyer before going into exclusivity. I mean, finding out as much as I can online, asking the right questions, deals retrade, extensions on due diligence, how many third party groups are going to come in for due diligence versus all internal? Are they lined up or do they like what's their availability? Just if you ask a lot of questions in advance, it takes out a lot of the ammo that they have to come back later. Because you've already sussed them out. You've already vetted them. And kind of them versus the other. Say there's five groups that are bidding on this deal based on your research of them, that these two have these qualities over these two over this one, and you just put that in your Excel sheet or whatever while you're comparing the LOIs. And being able to convey that to your client is big because they're just going to look at a few numbers, get very emotionally attached to the big number. But
Mm.
you have to go in there and go, listen, this number with this group, let's discount that 30% right now because that's what is likely going to happen. Now, how exciting, how attractive is that if it's a 30% discount? Oh, well, it's not really now. These other ones are more attractive. Okay. So these other ones that are now more attractive because these are ones that have a reputation for not retrading, for keeping their word, for all it. Now let's put that in there. Let's know this. And compare them on that level. I mean, it's our job to honestly talk to our clients, not get their emotional hopes up, but to give them the news that they don't want to hear, but they need to hear. And if that news is, listen, this deal that's an outlier most likely won't end this way. That's something that the investment banker, in my mind, I think they're obligated to tell their client. Now, if it does work out great and it stays there, fantastic. It's a huge win. Or, like I said before, maybe milestones are hit and you're actually the one going back and saying, listen, we need to sweeten this deal or it doesn't make sense for us to continue. But doing your due diligence on them in advance is a crucial part of the transaction.
Is I always like to throw in a different extra word in there, forensic due diligence. You need to be as thorough as possible with that, with your due diligence, and do it in advance. Now, I also want to mention a little story there because what you were saying there is very similar to Hugh Hilton. Do you know Hugh from Hilton
No,
Hotels?
I've heard that name, but I don't
Oh,
know much about him.
Hugh Hilton. I will send you an intro to Hugh. Now, he is a deal maker. That's what he does, makes deals. And he was telling me the same story as what you were just then about how some organizations, they have a tendency to bid high but not actually fulfill. And he said that he was doing a deal for, actually, it was a block of land down in Silicon Valley, in actual
Huh.
fact. Yes, and he was building an office build or wanted to build an office building down there with some large acreage in the center. And he said that down in Silicon Valley, they don't have a lot of acreage in the center of their buildings. It's all just buildings. And he said this was quite different. He said it made it to the last day of submissions. And he said, I knew who else was submitting. He said, so I asked if I could come and submit in person. He said, I didn't go with a slide deck, a pitch deck of any kind. He said, I went down with a single sheet of paper. And he said, I wanted to do it in person. And he explained that, oh, this is how some people do it. This is how others do it. And this is how I do it. What we've got here, that's what I'm going to commit to. Any extra money over the top of this, you can have it all. This is the deal that I want. Anything extra, you get to keep 100% of it.
Wow. I'm
And
guessing they were floored.
they were. He did not get out of the building. Well, I think he did eventually, but he didn't get out of the building without them accepting his proposal. But they called him back up and they said, thank you for your honesty and your integrity. We're not going to take your offer. You get the deal and you get the extra on top because
I,
of integrity. And Hugh Hilton is just made of integrity. So if I'll find something and I'll put in a link down below for this, for Hugh Hilton and for that story if I can find it. So
that
yes,
is incredible.
it is. But I think we need to do a little bit more focus on you if we could. So tell us about, you're in Silicon Valley. What type of deals do you do? Because some of what you've said there is quite particular, I think, to the fast moving environment that you work in.
Yeah. Most of the deals that I do work on are tech deals. For example, some of the deals I've worked on, and you could look at the tombstones online. I sold Removely to DuckDuckGo as a data privacy company. I sold a government application software company. I sold one of the largest virtual staffing companies in the US. I mean, good list of transactions. I've also done others than just sales side M&A. I've helped companies raise growth capital. I've helped do secondary transactions. So secondary transactions is something that's kind of unique to Silicon Valley. It's very popular here. It's when a company, think of it as a unicorn company these days, they stay private a lot longer. Whereas in the past, they might go public, maybe at, 50, $100 million valuation. Now these companies are 2, 3, 5, $10 billion and still private. But there's a lot of early employees, early investors that they're at these companies 10, 15 years and they are very rich on paper, but they don't have money in the bank account. So they're looking for ways to sell their employee or investment shares in these private companies. So they'll come to people like myself and go, listen, I have an estimated, $10 million worth of valuation company in this private company. Can you help find a potential buyer or investor for my shares? And then we'll broker those transactions. So those are secondaries. So that's something I'm more and more involved in as well. And as companies stay private longer and longer, that market is getting bigger and bigger. So there's a lot happening there. And a lot of these companies also, it's reputation, it's network, it's access to even be able to get on these cap tables to invest in these companies. So you need someone such as myself that might know someone to help facilitate if you're not based in Silicon Valley, if you don't have that Rolodex or alumni of, Google, Facebook, or PayPal, or one of these companies in the Bay Area with these huge networks. It's very relationship based to get in on some of these deals.
You and I have a mutual friend, Adam Coffey. I
Yep.
believe he's been on your show three.
Three times. He's one of my
Three
most
times?
popular guests. Every time he's got a book out, I try to get him on the show. He's incredible. And his information, what I really like about Adam is you listen, you interview him, that episode, you have to listen 2 or 3 times or more, and you still get stuff out of it every time you're listening to it. There's so much detail and powerful executable knowledge as he speaks. He's a fantastic guest and just a great human, just a great guy.
Have to agree with all of that. And yes, you do have to listen to it over and over again. He says that his books are aircraft books. You start reading when you take off, and you should be finished by the book within 5 hours by the time you land. I don't find it that way at all. I find that I'm too busy taking all the notes that it just doesn't work for me like that. Maybe I'm just a slow learner. That could be it.
I'm the exact same. Maybe I'll read it the first time in that 5 hours, but then I gotta go back for a second or third time. Because just as yourself, I'm taking notes on the side. I have this question that I want to ask him, or this or that, and then I just at the end, I'm like, well, when's his next book coming out?
Pretty soon, by the way, is the answer to
Okay.
that. And no matter how long they're watching this particular podcast for, the answer is probably going to be pretty soon. But the reason that I bring Adam up is not because of his genius in the M&A space, but also you said that you have to know someone like yourself, or you have to know someone like Adam Coffey, who
Yeah.
has the tentacles into the right VCs, into the right places. You cannot do this type of work without the right contacts. It really is a contact industry, and having those relationships with the people.
Yeah. Silicon Valley is a small world. People and I think communities in general, as time goes on, you you get to know the people you really want to work with, and at some point you go, I just want to spend my time with those people. And those are the ones you really double down on and everything. And I mean, how many of us now have an inbox just full of spam emails that you just click right through without even, you just look at it and you go, I already know that's spam. I don't even need to read it. I just could tell the title or the first line. But then when you see one from someone that's a priority. I'm looking at it, I'm reading it. Let me contact that person. And I think that's how, as time goes on, it's more and more of these personal relationships stronger and stronger. And yeah.
Well, you talk about that, and it is a little off topic, but I received a request to do a podcast with someone, and I looked this person up, and we'd spoken about 6 years ago. We were both doing different lives at the time. Neither of us realized that we actually met each other virtually previously. He was in Germany, I'm in Australia. And then we got on, and halfway through this, I said, look, I just want to do something with you. What are we going to do? And we spent the next 20 minutes trying to figure out what we could do together and how we could work together. Because you do meet people and you just want to do something with them. So it is that relationship side, but picking and choosing who those people are. For example, just last week, I have just released a new roll-up program.
Congrats.
A program. Thank you. And it's 120 lessons, 12 modules. So it's not light on, it's in depth, down in the trenches type stuff. And I said to this person, said to my podcast guests like yourself, I sent it out to them first because they're the people that I want to deal with. They're the people that I want to be around with. So you do pick the people that you want to be working with. I think that's very important. Now, did have another question. You were talking about Silicon Valley being a small community. What do you do anything in Dubai? That seems to be very much a growing business. I was talking with a money man, Zayed, in Dubai recently. Absolute gentleman and genius. Love him dearly. And he was telling me that Dubai are looking to recruit. And I don't know how you do this. I haven't watched the movie for a while.
But the
1 million AI programmers. That's just incredible. 1 million AI programmers that Dubai's trying to recruit. So do you do any work over in there? And how does that differ from the Silicon Valley? I imagine relationships is a very key one there as well.
So I haven't done anything in Dubai, but actually I did just have a conversation with a gentleman that will be on my podcast that's been in Dubai for a number of years. Artu, he was the gentleman that was not the brains, but the person that founded Silk Road contacted him to kind of learn and figure out the infrastructure for the setup of it. And if people aren't familiar with Silk Road, look it up. It was the kind of eBay, but for mischievous things, and everything was paid through Bitcoin, where the person went to jail for about the last 20 years or so, and now has just been recently released. But he's been based in Dubai for some time. He just came to Silicon Valley for the first time in 15 years, or the US first time in 15 years. We met up with some other people. He's going to be on my podcast in the future. And he was talking about the Web3, the crypto, the blockchains community that has developed in Dubai over the years because of their tax friendliness towards crypto, kind of the ecosystem that they've built out for entrepreneurs. And he invited me to go. So I've yet to go to Dubai. I probably will be there in who knows, the next 6 months, year. I was in Saudi Arabia in Riyadh not too long ago. And I mean, the energy there was incredible. So if there's anything like that energy over in Dubai or bigger from what I've seen on YouTube, my gosh, you got every YouTube influencer there, it seems like.
I think, yes. I haven't
So,
been, by the way.
well, maybe we'll arrange it so we're there at the same time. But I'm interested to learn more about how a country, from my understanding, can really set itself up to be entrepreneur friendly. And because of that, have such a massive amount of growth in such a short time.
I'm going to introduce you to Zayed. So I will send you an invite to Zayed.
Craig, thank you so much. I need to reciprocate and give you some good intros for your podcast and that.
Okay, so let's talk about trust. Isn't that what we're here to talk about today?
Yes, yes.
That was what we were focused on.
I think you've given some great examples. I mean, you mentioned that, there's two people you're gonna introduce me to, and then we talked how we both know Adam Coffey. I mean, if there wasn't trust there, these intros wouldn't even be considered. And the fact that both of us know Adam Coffey and are on speaking terms with him means that we have a small circle of trust amongst our networks. And I mean, maybe we haven't talked about it, but I think the listeners have already gotten some examples of trust amongst us in the community and the openness of, I mean, gosh, these aren't everyday people you meet at the grocery store where connections are being made and introductions. These are people who, as we mentioned, their inbox is full. Unless it's a warm intro from someone you trust, that email gets skipped.
Well, I got a LinkedIn message yesterday from a 9-figure person, and someone that I introduced him to hasn't paid a bill.
No.
Yes. He said, what do we do about this? And we've had a bit of a chat about it, but there's a breach of trust. Now, I was trying to be kind and help someone out, which I try and do every way I can. That's why I've got this podcast as an example. I try and help people as much as I can. But this person has obviously not known the protocols, the way to deal with people of this quality. And what does that say? The good news is that this person does trust me. This is not a hiccup. This is just a note. We've got a bit of an issue here. We've got a long-term relationship of over 20 years. So this isn't going to break a bond of trust at all. But it could very well have. If this was the first time that I had introduced someone to them and they had not paid or not come up with the funds that they were supposed to, that would have breached the trust. That would have put me in jeopardy over the long term as well. I hadn't planned on bringing this up, but...
Yeah. But isn't that odd, though, that it went from a thing of, Because if that person hadn't had the trust with you, I'm sure the contact to you was more, hey, Craig, you're my friend. Be careful of that person you just introduced me to, versus Craig, I am blaming you for
No.
this person. Because there's that trust there and that person knew you wouldn't purposely introduce anyone that could do them any harm.
Mm.
So having that trust there, it alters all different conversations. There's a lawyer that I've worked with in the past on some M&A deals, and there's one person I did not know but reached out to me from another contact and asked for an introduction to an M&A attorney. And I prepped this guy, said, hey, I don't know this person well. He's looking for an M&A attorney. I think you'd be a good fit from the little I know, but I don't know him that well. And my lawyer friend was like, Shawn, I'm an adult. I'm a big boy. If it doesn't work out, it doesn't work out. I'm just happy you thought of me first compared to anyone else. That just made me happy. And I was like, whoa, okay, but
Not everyone's like that, though.
true.
I do try and premise. So I'll meet someone and then I will do an introduction and I will say in the same letter, I'll have two components, one to the person I'm introducing, one to the person that I've just met. And I will say in there, I have only just met this person, hope that there is going to be some synergy there and we'll be able to work together. But I have not worked with such and such myself at this stage. And that's what I will generally put in the letter that I will send to you and to Zayad and you and Hugh Hilton. That will be in the that'll be the style. I always break it up into two sections to give a bit of a bio on one, bio on the next, and then what relationship I have had with the parties, just to give
I,
some perspective and lay the foundation.
I like that. I like how it's very clean and clear. So expectations on both sides.
Well, you have to. You don't know where things are going to go, but you want people to know where you stand at this stage. So back to the preparation side of things. When should people start preparing for an exit or, as you said, a repackaging? When should that start, do you think?
Oh, when they start the business, to be honest. What I
That's
mean
the
by
same
that,
answer everybody gives. Perfect.
it's true though, because if you not so much having the end goal of I'm selling this at this, it's more the if I build it from day one with processes and things in place and I track these metrics and I have these milestone goals of growth and I have this bigger, if you have all these things, you're building that efficient business with and if you're tracking the margins for industry average and you see yourself better than that, if you're really thinking of all these things that the investor or buyer at the end are going to look for and you're starting earlier on, you're in such a better position where if say something happens or someone approaches you to buy, it's ready to go at any time versus what normally happens. There's a death in the family, there's a divorce, there's an accident, there's something
Taking the
that
words out of my mouth.
there's something where, Shawn, I have to sell my business in the coming months because of this reason. Okay, well, how long have you been planning to do this? Well, this happened, so now I have to. Wow, okay. Well, if we had planned everything out, we could have gotten you this huge amount for the business. But because things aren't planned and there's so many things rough around the edges, it's going to be structured where a lot of this is going to be an earn out or something like that because the buyer is looking at how much risk is here and they're thinking you're not going to transition over and they're worried about this and worried about that. But you have to sell it because of your co-founder being in the hospital and being sick and you're worried about this being transferred or, you know, this happened. A lot of businesses are sold because they have to be sold because of the current situations. Whereas if it's sold because it was well thought out and well planned and prepared, that's when you get the real high multiples, the real value for the business. And not only that, you get the ability to prep for post sale with the taxes and how that are structured and everything. So you're able to save. I mean, what's a $10 million sale not planned versus a $10 million sale planned? It could be a couple million in taxes right there.
Yeah.
Easily. So
In
there's so
Australia,
many
it'd probably
things.
be about 8 million taxes.
Well, at least they leave you enough to cry over. So
Yes. Well, Sean, this has been fun. This really has. I think what you've described here is so relevant to every single person. Every single founder and entrepreneur needs to know what you've imparted here. Oh, Start now. When do you plant a tree? The best time to plant a tree? 20 years ago. If not, the second best is doing it right now. People need to start preparing and they need to be thorough. They need someone that's done it before, someone like yourself that knows what to look for, knows that those two signatures, oh, and they've got two dates, the same date. Yeah, that you can't do this yourself. You need to go out and get the knowledge a long time in advance. Is there anything that you'd like to leave us with, Shawn?
Yes, I think going back to the overall theme of this episode, trust. When you're looking for the people to work with on these transactions, the business broker, investment banker, the A lawyer, the accountant, the CEO coach, the everyone on your team, get to know them early so you can build a relationship with them, because it's so important to know, like, and trust them. You want to make sure that throughout the process, they tell you what you need to hear, not what you want to hear, that they prepare you in advance, that they know what you want, and all these conversations are done in advance, so it's not just emotional, it's thought out. And when the team is prepared in advance and the relationships are there, you're going to get a great outcome. So start early and get to know everyone on your team, get to know great people like Craig, build out that team and you'll be in great shape.
Thank you, Shawn. And I say that on behalf of everybody that's listening at this stage, because I know that you just saved everyone that's listening 7 figures by that last sentence. We waited until the very end, but you just saved everybody 7 figures with that.
Oh,
Thank
Craig,
you
I was
so
hoping you were going
much.
to say 8 or 9, but okay.
I don't know who else is listening, that's all. So I'm a conservative type person. Thank you so much, Shawn. It's been wonderful to have you on here.
Thank you. It's been my pleasure.